So, what an interesting start to 2025. 2 months into the year, and certainly a lot of volatility in the stock market. We have seen concerns that the proposed tariffs US President Donald Trump wants to implement might lead to inflation, which would in turn possibly delay the Fed lowering interest rates. We've also seen some early signs that the US economy might be slowing down a little, and that the Chinese economy may be showing some signs of a slight recovery. And furthermore, we saw the news about Chinese AI DeepSeek potentially disrupting AI companies' dominance in the AI race, as well as much anticipated financial results from Nvidia. Even with all this volatility, I managed to once again beat the S&P 500 return for my clients, whose fully offshore share portfolios in US dollars or pounds I manage on a full discretion, fully managed basis. Just to elaborate on this, these are what is known as managed accounts. They are segregated offshore share portfolios in each client's own names. It is not a fund. However, I do the same trades for all clients, so in that way it is similar to a hedge fund. My clients give me power of attorney on their account. This can be done either directly through our preferred offshore stockbroker called DMA, or alternatively using the Sanlam Glacier platform. Best part of this is that it is not a long-only strategy. I expect to return double-digit annual returns to my clients, whether the markets go up, down, or sideways. Just a disclaimer, it is of course not a risk-free strategy. There is risk involved. I would say this is a high-risk investment. How risky exactly? Well, while it has not happened yet, there is an unlikely possibility that the portfolio could incur 10 to 20% drawdown in one day. Past performance does not guarantee future results. The minimum initial investment is $18,000 US. I'm massively grateful to my clients who have entrusted me their hard-earned savings to me to manage on their behalf. So here are the returns so far in 2025 on my strategy. In January, we've done 6%, and in February, I've done 3.8%, so a total of about 10% so far in 2025, which is way outperformed the S&P 500, with a maximum drawdown of 3%. I started the strategy in October last year. Returns were 1.4% in October last year, 4.2% in November, and 5.5% in December. So just out of interest, going on to the global stock markets, the best performing stock markets so far in 2025. The Hong Kong Hang Seng Index up almost 17%. European markets like Spain, Germany, France all doing very well. Spain up 14%. The UK up 6.6%. South Africa up 5%. And the US S&P 500 up 1.4% till the end of February. So interesting there. And looking at the best performers on US listed stocks with a market cap of greater than $500 million. I haven't really heard of many of these companies. Diginex Limited up 924%. Fubo up 125%. The only one I have heard of is Xpeng, up 71%, the electric vehicle manufacturer. Looking at the worst performers on US listed companies, Elf down 49%, SoundHound AI down 48%. The Trade Desk, I think they're involved in software for architecture, down 43%. Target Hospitality down 43%. And then looking at more well-known companies that you probably have heard of, US-listed mega caps, which with a market cap above $200 billion. Alibaba, the Chinese company, up 54%. They do have an ADR listed in the US, but it is a Chinese company. Philip Morris, the tobacco company, up 32%. HSBC up 22%. Eli Lilly up 21%. Looking at mega caps, worst performers so far, Salesforce down 12%, Taiwan Semiconductor down 6.7%, Bank of America down 3.8%, and Toyota down 1.2%. Looking in South Africa, the JSE listed stocks, companies with a market cap of greater than 500 million rand. The gold shares doing very nicely. Goldfields up 43%. DRD Gold doing 37% almost. Richmond having a good year so far, up 36%. Again, the gold shares doing very nicely, and we've seen the likes of the platinum stocks coming back a bit. Impala up 18%, and Prosus and Naspers having a good return so far as well, up 14% and 12% respectively. Looking at the worst performers so far, Mass down 18%, Omnia down 17%, AVR down almost 15%, Woolworths down almost 15%, and Thungela down 14.4%. Looking at US money market, as of early 2025, US money market rates are generally around 4 to 4.5%, whereas in South Africa, rates for general saving accounts are very widely depending on the bank and the amount involved. Some accounts offer rates between 6 and 8.3%, depending on the minimum deposit requirements. Gold has continued to go up almost 9.6% so far till the end of February. And looking at the cryptocurrencies, I'm not an expert at all in cryptocurrencies, but just out of interest, I know some people are. Story IP up 91%, Mantra up 58%, and Cubetics doing well, with Polkadot and Polygon also doing pretty well. And looking at the worst performing cryptocurrencies, Radium down 68%, Official Trump, the meme coin, lost 60%. Interesting, that one. And Dog, I don't even know how to pronounce this, down 58%. There we go. It'll be an interesting year ahead, and looking forward to continually assisting my clients and helping them hopefully beat the market. If you have any questions, you're welcome to give me a call or drop me an email on warrens@afrifocus.co.za. Have a fantastic week ahead.